All right, the Fed cuts rates by 25 basis points, a move widely expected by market observers. However, concerns about the potential impact of President-elect Trump's policies on the economy and inflation linger. Sonia Meskin, UBS Investment Bank senior economist, joins us now to discuss. Sonia, good to see you.
Great to see you.
So let's start there. You expected 25, you got 25, but walk us through what you saw and heard yesterday, Sonia. Did anything surprise you?
Well, I don't think the Fed wanted this to be a surprise at all.
They wanted drama-free.
Absolutely. In fact, I'd wager they wanted to be in the background, and they pretty much achieved. If this was the goal, they pretty much achieved it. And in fact, for December as well, there's a lot of talk now about December. Do they cut? Do they, in fact, pause? Do they cut by 50? I've heard that out there as well. We really think they're just going to go another 25 and then reassess into the next year because there's a lot of uncertainty around policies right now. We've moved the red sweep scenario, including the Republicans actually also taking the House in addition to the Senate and obviously the presidency. So there's a lot of moving parts there too. And the Fed is probably just going to watch and learn and take what comes their way effectively as a given. They can't really respond to it yet.
Yeah, and Powell was very
clear
on that point that he doesn't know, right? Your job is to try to figure out what they're going to do, even when they don't know what they're going to do. And we've had several banks coming out and saying, maybe the Fed's only going to cut rates once next year. We've even had some folks float the idea of maybe there would be even an interest rate increase next year, depending on fiscal policy and how that flows through. What do you think?
We think they pause in January and then they continue to cut at a quarterly pace of 25 basis points.
And why do they pause, Sonia, at that point?
We really do think that the labor market is going to justify pause in January. The labor market has been a bit stronger than we think the Fed had really anticipated. And in fact, Chair Powell had acknowledged as much, that the labor market has been a bit stronger than they actually feared in September. So we think that alone would justify a pause. In addition, though, we think it's important to know that, again, there's a lot of policy uncertainty. The Fed is facing a different environment today than they did in 2016. The tariff configuration is going to look different this time around, right? It's not just about China this time around, especially in the red sweep scenario. We also have a much larger deficit this time around, even though the economy is doing well. Each time that there's a tax cut, the marginal benefit of this tax cut is probably going to be smaller than it would have been otherwise. And then even the extension of the TCJA alone, just to maintain the status quo, not to have a fiscal contraction, is about $5 billion over 10 years? That alone is quite huge. On top of that, you introduce tax cuts and then tariffs, forces that actually move in opposite directions from the economic perspective. Not clear what the end result will be.
And we also, the timeline is, the market is reacting as though, well, the market is a discounting mechanism. But if you say it discounts 6 months out, this stuff isn't even happening 6 months out necessarily, right? So all of the things that the market is now looking for from fiscal policy, when is all of that potentially coming?
Well, it's going to get priced in before it actually is implemented, right? Unlikely anything would actually hit the economy until 2026. But what we do have going on in 2025 is the debt ceiling and the potential reconciliation. And that, I think, will be the focus going into next year, in fact.
Were you surprised, Sonia, by, even as the Fed raised rates as quickly as they did, that the economy stayed resilient? And why did it stay resilient?
Interestingly, the term premium went up, right? Rates actually went up. Rates went up also in anticipation of the Trump presidency, but even before, after the 50 basis point cut, rates actually began to rise. So what does this tell us? It could tell us that growth expectations are rising, but also could tell us that uncertainty from the investor perspective is rising as well.
And so as we continue to see the Fed maybe cut another 25 basis points in December, do you expect rates will come down, or will we continue to see an elevated level?
Truly, it could be less about the Fed and more about the deficit, which is why, again, the debt ceiling is going to come more and more into focus.
All right, Sonia, great to see you. Joining us.
Thanks.